I just invested $95,000 into several new stocks I'm going to cover into this video. These are new stocks I haven't really talked about on this channel before, so you're in for a very exciting video for new stocks to diversify your portfolio and make a lot of money with. So taking a look at my portfolio, right now I'm up over $100,000 because we're getting some really good news. And I told you in the Monday before 9:30 a.m. video, we're about to get some skyrocketing news. And I'm pumped up, guys, to make a lot of money. And we're on the road to $4 million again. So let's talk about the stocks that I ended up buying. So check it out. Sweetgreen's had really tough earnings, I will say, and the stock is down 16%. So Sweetgreen's ended up crashing. Essentially, this stock's valuation completely plummeted, which is actually a good opportunity for smart investors. The market cap is under $1.8 billion. This is a really cheap stock at just $15 per share. Now, Sweetgreen's is a company that makes salads, they make food, they have many chains. And actually, I was eating Sweetgreens all the time back in college on University of Pennsylvania's college. I was basically going to Sweetgreens all the time, even though it was tough to afford. I'll be honest. When I was in college, it was difficult to afford. And Sweetgreens is kind of going for that more premium salad. And they are expensive. And we'll talk about what their business looks like. So first of all, they're expanding. Okay, they've had very few stores back when I was in college, like 8 years ago. They had one store at University of Pennsylvania's campus, and then they had one store in on Walnut Street in Philadelphia. So they didn't have that many stores, and since they've been really, really expanding nationwide. So Sweetgreens is now entering new markets, including Sacramento, Phoenix, and Cincinnati as part of their 2025 growth plan. And Sweetgreens is kind of like that fast casual chain and the trend that I personally really like. We've seen companies like Chipotle, like Cava, become very popular amongst investors, and Sweetgreens is kind of that healthy, approach. They have salad, they have local ingredients, and yeah, it's just fast. You come in and you get a salad, and they also have some really cool technology I want to talk about. So the company plans to open at least 40 new restaurants in 2025, with 20 featuring its automated infinite kitchen technology. The Infinite Kitchen system automates the assembly of salads and grain bowls using a conveyor belt mechanism that dispenses ingredients into bowls as they move along the line. So they found a way to be more efficient and faster, and this technology enables each unit to fulfill approximately 500 orders, 500 orders in just 1 hour, significantly increasing throughput during peak time. So when they're really busy, the system just boom, 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 many salads, especially because a lot of their sales are actually done digitally. So a lot of customers are ordering the salad ahead of time, or they're just getting it delivered. So this is what I really like about Sweetgreens is if you look at their labor savings, so that each Infinite Kitchen location has actually achieved a 7% point reduction in labor costs compared to its traditional setup. So having a lot of employees is very expensive for the restaurant businesses and for the restaurant chains. You see Chipotle, Cava, the people working at the restaurant is a significant cost, especially during non-peak hours. Like if you think about peak hours, it's fine. But if you look at a restaurant business and you go there at a different time than lunchtime, it's oftentimes not as busy. So labor costs end up being fairly expensive. So the cost of goods sold, or COGS, there has been actually a 1 percentage point increase in COGS overall in Sweetgreen's business. So I'm very bullish on Sweetgreen's. And I think it's a really good opportunity. If we look at the stock at $15.23, you look at the 6-month chart, it's been in a nosedive. Now, the other stocks I'm going to talk about are a bit more on the bullish side. They've been very popular and bullish. We'll talk about Robinhood here in this video. But when I look at a chart like this, yeah, it's a falling knife, and I'm certainly not recommending putting a lot of money into it. But as part of my $95,000 that I invested, I have purchased some Sweetgreen. So yeah, I'm very, very bullish here on the stock's future, especially their expansion plan. All right, so now the next stock I want to talk about is Hims. Here's the website for Hims, and I want to go over the website because I need you to understand the business of Hims and why they are specifically so different, and why I think investors don't really understand the way the stock is being valued, because I believe Hims is undervalued, and for one main principle that a retail investor just probably doesn't understand. But let's talk about the business generally. So Hims, helps with weight loss. They have hair regrowth, which, yeah, I kind of need. I have less hair, whatever. So maybe I'm a customer for this, right? They have pills like Viagra, Cialis for sexual health, right? For erections. They have anxiety stuff. They have skin stuff. And they have a really interesting website, and they also have a very good business. So their business is incredibly strong. Just looking at the stock, it's at $51. And I was telling a lot of folks to buy small amounts of HIMS. I didn't think it would explode to this degree, but now that I've done further research into the business, it makes sense why the company's valuation has increased so much. Although a 75 PE ratio is not cheap by no means, I think given their growth, their marketing plan, and their overall business, I think this is actually a reasonable valuation. And as they continue to grow, the PE ratio will come down and the stock will go up. And, we're looking at the stock going back up to $68 per share, which was the high on February 19, 2025. So, not that long ago, this stock was trading for some very big levels, and we see now that the market is really recovering. So HIMS it's a US telehealth company essentially. So they were founded in 2017, and they offer direct-to-consumer platform that provides access to prescription medications, so over-the-counter stuff, personal care items, and the company operates under two brands. They're targeted towards men, and hers, which is targeted towards women. So very, very genius marketing, very genius brand that they have. So yeah, we talked about the sexual health, which, by the way, there's a pandemic. There's an epidemic or a pandemic. I kind of forget the difference there, but there is an epidemic of men with sexual health issues, even at low ages, like very low ages, right? So, and I know this myself. I've had some experiences. It is pretty wild and concerning, and HIMS is essentially addressing this issue with men. Now they have two different treatments or medications, sildenafil and tadalafil. So sildenafil, and I actually studied medicine for a short amount of time, so I'm very well versed here. But sildenafil basically is Viagra. Viagra is a 4-hour lasting drug, whereas tadalafil is 36-hour lasting drug, helping with blood flow, and basically it helps men get erections. It also can help with premature ejaculation and just general libido enhancement. And I'm very bullish on this because of so many issues, and the way that HIMS is selling this is through a monthly subscription. So if you think about a monthly subscription, it's absolutely freaking wild, because it's not just like, okay, you buy it and you're done. They have you on a subscription, which means that it has a similar cash flow to software. This is what everyone is really missing about this company, and why the valuation is starting to really rise a lot, is because it's not just like, okay, you buy something and you're done. No, you're a repeat customer, and a repeat customer has consistent cash flow month after month, and it's really good for income. So when you have an epidemic of men, even young men, I'm telling you, young men under 20 have erectile dysfunction nowadays. Many reasons for that: drop in testosterone, heavy use of corn, and there's a lot of issues. And this is actually creating a bigger TAM, or total addressable market, which, by the way, we'll talk about TAM as well when we talk about Robinhood stock and how that's next. But when we look at TAM, the total addressable market, it's only growing. Only younger and younger guys are having erectile dysfunction, and of course older men as well would have it. So yeah, when you look at the total TAM, it's actually a huge business. And I think that business is only going to grow, and it's growing at pretty big rates because of, whatever. That's this little health is a little off topic, but you understand that there's a huge opportunity. Now, for sexual health with women, they have products for sexual wellness as well, although I'm not as well versed there. Now, moving over into the hair care part, obviously a lot of men are balding, for whatever reasons, diets, environmental factors. So they have minoxidil, which is over the counter, like you can get that anywhere. But then they have finasteride, which is a much more powerful drug. Finasteride, I believe, is by prescription. Not 100% sure, but finasteride is definitely a more powerful drug that can have impacts on your health much more than minoxidil. Minoxidil, you just put it on and it's whatever. I should probably start using it myself. But yeah, this is a big concern because, especially in America with dating being tougher, and lots of just factors on people just wanting to look good for the dating market. For just generally, people want to look good, of course, right? And hair is a big part, and people have a lot of insecurities with that. So the hair market is easy money. It's easy money for HIMS. And minoxidil and finasteride you have to use for the rest of your life. So Again, monthly subscription, Hims is going to make a ton of money because once they got you signed up, you're paying for that. Like, you're not going anywhere. If your hair is receding, you're using minoxidil, you're going to be paying for it every single month, month over month, right? They also have some, for the women's side, they have some volumizing shampoos, which also includes minoxidil, by the way. Mental health, anxiety, depression, you guys already know. That's obviously very growing in all over the world. So they also have stuff for that. Weight management, of course, people, very high percentage of America is obese or overweight. So yeah, of course, they have a lot of weight management drugs. They're basically just tackling all the biggest issues that are essentially on repeat. Like, customers are buying products that are on repeat. Hims gets you in the door, they lock in that relationship, and there you go. Now you're paying Hims directly. So it's kind of like essentially like a middleman, and it's really genius marketing, and they're very, very good at running ads. So what I'm bullish on with Hims is they figured out the marketing model, right? They figured out the creatives of Facebook ads, YouTube ads, Google search ads. They're dominating because they know their demographic, they know how to target that demographic, they know how to market to that demographic, and then they get a consistent income stream because they have found the customer early in their lifetime journey of searching for a solution. So I'm super bullish on Hims stock. To be honest, in the long term, I think this is going to be a $100 stock in the next 12 to 24 months. And this stock, unlike, Sweetgreen's, this stock actually has really good performance. Not that past performance predicts future performance anyways. So you are nuts. If you look at Sweetgreen's, you're like, oh, well, I don't like it because it's down. Oh, I like Hims because it's up. No, the past is already over with. So as an investor, you're only looking at the future prospects. You don't care about the past with the stock. It's not like a car that you buy or a woman that you marry. The past matters in those cases, right? But with a stock, no, you're just buying in today, right? So you're thinking to yourself, okay, is today a good price to buy? So yeah, the past performance doesn't really matter if you're a new stock investor. So you shouldn't have any mental biases for buying one or the other. If it's a good purchase in terms of its valuation being cheap and its future growth being good, then it's a good purchase regardless, okay? So let's go into the third stock that I have invested in, which is Robinhood. Robinhood stock is incredibly interesting. Like, over 6 months, this stock has performed very, very well. Like, we've made tons of money, and this is a stock that I owned, by the way, before. And yeah, I'm just jumping back into Hood. However, I'm not fully jumping in with shares for Robinhood specifically. I am selling puts. So disclaimer, I am selling puts to get into the stock because it is up a lot very, very fast. But I do think that smart investors will realize that Hood has a lot of positives for it. And specifically, I want to talk about earnings and how instrumental earnings are and how good they were. And I actually want to go over an analyst, what he had to say. His name is Dan Dolov. And I want you to watch a quick clip, and then I want to digest this clip.
I don't see anything that's not to like. I mean, this is one of their best quarters on record, right? You're getting funded accounts are at an all-time high. They beat on revenue, record gold number, record, I think, both quarterly and also on a year-over-year basis. The stock's up 25% year to date. It makes sense to get some air out of it, but I think this is probably just a buying opportunity at this point.
And how much progress are they making on the undergirding things that they need to do so that the numbers look good even when there isn't all this volatility and crypto isn't doing so well?
I think you hit the nail on the head. This is the most important thing that people are missing about Robinhood. They're looking at a $600 billion TAM, and I've never seen a company that's more aggressive and actually addressing that TAM, right? $3 billion in revenue now, going to probably 30 in 10 years. They're getting into more territories, to your point. They're getting into Asia, they're getting into Europe. Their product velocity is the best one I've ever seen, right, with Robinhood Gold. With pretty much every quarter there's something new. And so I think over time, what you're going to see is they're not going to bifurcate from the volatility, but they're going to fare out better than the volatility.
Yeah, I think the commentary in the release about the fact that they're attracting more high net worth users, more high net worth traders as well, was very telling. I think about it like Interactive Brokers, for example. When it comes to that type of clientele, are they going after more of those demographics? And if so, is that a more robust customer to have to move through market cycles?
100%, right? So this is exactly the point. They're going after the Schwabs and the Interactive Brokers of the world, and they're doing really, really well. I think if we sat here 3 years ago, everyone thought this was like a joke for millennials, and now people are taking them really seriously, right? And I think their competitors are getting worried about them taking assets away. I think deposits was like 18 billion this quarter. I think that's exactly the strategy. They're growing with their customers, and they're bringing in wealthier customers into the platform.
All right, so Robinhood, they beat on revenue and they have record amount of gold members. So gold members is really important because, again, like hymns, like SoFi, gold is a monthly recurring subscription. So everything is going for software. Everyone wants to get you for software like cash flow, which is why it's so funny to me when people like look at my coaching and they say, well, Henry, your coaching is a bit expensive. Yeah, but it's a one-time fee versus if you look at a lot of other YouTubers who have Patreons and monthly groups, which is like $50, but you don't really get that much out of it. And if you do 12 months, it's $600, right? So 50 times 12 is 600. So it's kind of funny how monthly subscriptions go because they seem really cheap, but they end up being really, really expensive over a long period of time. And that's what a lot of businesses do. And I think this is pretty smart for Robinhood because once they lock you in as a gold member, then essentially you're probably there for a long time. And Dan Dola talked about the total TAM, which is a total addressable market of 600 billion. So with international expansion coming in as well for Europe and Asia, I'm super bullish on Robinhood in the long term. I mean, it's no doubt it's going to be a $100 stock. It's just a matter of like, when is it going to be a $100 stock? And also one thing that I want to say is that Robinhood essentially has a really unique business advantage. Most businesses that are going for like a higher end person, like for example, Robinhood is getting a lot higher net worth individuals, right? At first, Robinhood was like kind of like a joke. It was like a new entrant into the market. So it wasn't real competition for Schwab. It wasn't real competition for interactive brokers, right? But then as time went on, these brokers are really getting worried because they are taking customers and they're taking market share. And if you think about the prime customer for a brokerage, it's really like a more wealthy, richer customer or individual who is making lots of trade, right? Because making more trades is more fees and every business wants to make money. But what's interesting is Robinhood actually builds relationships from zero. It's amazing. They don't care if you're poor. They don't really care because they have zero marginal cost of adding another customer. So it's not like for me, when someone's coaching with me, I'm spending time with them, right? But for Robinhood or any software, it doesn't matter. They don't even know you exist. You just come on and it costs them nothing. And now they're making fees and they're making income off of you. And essentially, they don't really care if you come in poor and then you get rich later. Great. That's good for them, right? And usually businesses can't do that, but Robinhood can, which is what I like about the business is they cater to everyone. They cater for the poor, they cater for the rich, they cater for the in-between, they cater for the beginner, they're catering now for more advanced traders, which is really awesome. Like me, myself, when I was using Robinhood at first, I've been an early user of the platform when they first came out. But when I started coaching 5 years ago, I had students coming in with a couple $1,000s, and now they have a couple $100,000 over the 5-year period that, either I've been coaching them or they've come and gone, obviously, over 5 years. Most people just learn how to trade, and that's just a lifelong thing. They're just trading for lifelong. And I've kept in touch with many of my early students, and many of them have 6-figure portfolios. They started with not much, now 6 figures. Some of them are even at 7 figures. So if you look at Robinhood, they've completely won. Robinhood has won with that type of person who has come in small and grown their assets. And Robinhood doesn't have an issue with that because they don't have any cost to acquiring or to managing one person. Like, it's just a platform, right? It's just a software. So if you look at the loyalty and the longevity of client relationships with Robinhood, I'm incredibly bullish, and I'm even more bullish on Robinhood than SoFi because, once you're in, I don't think you're really going to be leaving Robinhood, especially because the platform is so easy to use. Now, these are 3 stocks that I invested $95,000 into. I'm also investing in new and different stocks that I don't cover on this YouTube channel, and I'm going to be trading those stocks in my 15-day challenge. The 15-day challenge is going to start in less than 7 days now. So if you're interested in that, it's the first link in the description. I'm going to have 8 trades. I'm going to have 2 live sessions. I'm going to be responding and talking to you personally one-on-one. It's the craziest value ever for the price of essentially dinner. And I'm going to help you scale up, learn, fill in some gaps and issues that you may have in your trading, whether it's fundamental analysis, technical analysis. I have a lot planned. I'm super excited. I recently have more time in my schedule, so I'm really excited to have this 15-day challenge. We're going to have about 30 spots available. I'm going to cap it once it's full, but right now we still have more spots because we still have about 6 more days for you to sign up. It's the first link in the description. I'm super excited for that. You can see all the details, or you can even send me an email or just message me on Instagram if you have more questions. Either way, I'll put it all in the description, my email, the challenge challenge and my Instagram as well if you just feel like messaging me there. So anyways, I'm excited for this week, and I hope you guys have a good day.